Stock picking is hard, and if you've ever tried to do stock picking, you know the feeling of not knowing whether you want to buy a stock right now or to wait for later. Is it a right idea to buy the specific stock you're looking at? And today I want to talk about insider trading. Basically, the ability to see what people inside the company are doing and how to use that to make a better decision. Are you ready? Let's begin. Hello everyone, my name is Avishai and I talk about the stock market, investing in startups, alternative investing, and sometimes crypto. Today I'm going to be talking about a site that allows you to see all the insider trades that are happening inside companies, and you can use these insider trades to understand if the CEO or all kind of other important figures in the company are actually bullish on the company they're working at or not. And when to know when a company C-level or executive is selling and it doesn't necessarily mean something bearish. So we're going to talk about these two aspects of insider trading. Dustin Moskovitz, the CEO of Asana, bought $72 million worth of his company's shares at Asana. Now, the minute this was announced, you can see the huge spike in the price of Asana. Now, this is because most people think that if Dustin is buying the company's stock, there's probably a lot of good news ahead to come. Dustin would not be buying the company's stock if the stock was not going to go up eventually because of good news, right? Well, this is not 100% thing, but people will assume that if a insider is buying a lot of company stock, then there is probably a reason for doing that. Now, we don't know what exactly is going to happen, and by the time this video is published, the stock price can go even more up or more down. But there's always the likelihood of Dustin buying the stock of Asana just because he wants to and not for any specific reason. But there's also even a very slight chance that he's buying the stock just because there is bad news ahead. So take into account that just because somebody bought the stock doesn't mean anything, but in the same time, there's a likelihood that it means a lot. I know, confusing, right? Now let's talk about the opposite situation where somebody actually sells the stock as an insider. Many times there are news articles that come out about Mark Zuckerberg or Tim Cook selling shares at the companies they work for. And it might be a bit misleading at first glance because Mark Zuckerberg and Tim Cook have plans to sell automatically the shares. So even if you see sometimes an insider trading at a company of a CEO selling the shares, it might be a part of an automatic plan. Now, don't get me wrong, there are situations of CEOs dumping the company's shares for all kinds of reasons, such as company not doing well or that they are looking to cash in on most of their shares because they have their own reasons. Sometimes those reasons are actually legitimate reasons related to buying a house or a big expense. Now, because of all the multiple scenarios that can happen, it's really important to understand why the stock was bought or either sold by someone specific, and if there is any pattern. For example, in Asana's case, Dustin Moskovitz has been buying the shares consistently, but you can see that he's the only one buying them. Other people in his company are actually selling shares constantly. You have Lacey Eleanor and Juan Tim M and Faranichi Chris, and you have these people continuing to sell and sell. They're not doing any purchases. And all the stock purchases are done by Dustin Moskovitz on his own. Now, when you dive into the numbers and you see people who have minus 12% or minus 13% in the company, that usually causes me to ponder, why are people willing to part with so much of their stake in the company? Parting with 13% of what you have and then another 12% of what you have in 2 months, as somebody who is in the company and thinks that the company is going to be successful, doesn't make so much sense. But again, this is more of a way to guide us to make a decision. This is not rocket science. It's basically a table with buys and sells, and we have to make sense out of it in a very heuristic way, in a sense. I'm just going to show a couple more examples of companies that we all know and just jump into ticker symbols I like. So you can see Facebook, for example, you just have Mark Zuckerberg selling and selling and selling and selling. If you look at this and you look at the stock price, you know that there's basically no correlation between this and that. And that Mark basically gets a lot of shares through options and that he can buy back, and he just feels comfortable to just sell more and more of the company as time goes by. Now, the site I use to track these is through openinsider.com, and this site is pretty much accurate, and you can see that every company has a table with the names of the employees, and you can see there are different types of sells and purchases. And right now I'm just going mostly between companies with sells. I'm going to show you really quickly a company I like that has some buys in it, and that company is Store Capital, which has a lot of insider purchases. So as you can see, over a long period of time, this company just had only insider purchases, and it's one of my favorite stocks by far, and it is my biggest position in each and every portfolio. Store Capital is my largest position by far in each and every portfolio. Now, what I'm about to say is not a rule by any measure, and it's not something that I can prove, but when I usually search for insider trading inside stocks that have dividends, there is a high likelihood to see more purchases, just because whoever is buying is earning from that dividend on a quarterly basis and is not just waiting for the stock to reach a higher price. Now, if a company is really new to the stock market and you're seeing a lot of selling, that should be a red flag. If a company has not had a lot of history in Wall Street and everybody on the board is selling their shares, you should be very worried why they're doing that, because if the company just IPO'd, employees should be more than happy to see their shares go up if the company is doing well and sell it in a later date, not right away. So to kind of summarize, buying or selling, it's hard to make heads or tails from things. Some organizations that have dividends will see more purchases and less sells. And if you see a company that has a lot of sells right after an IPO, that's probably a red flag. Now, we have to remember that some people sell because of automatic plans, and some people buy regardless how the performance of the companies is doing. So with all that said, insider trading is just a guide, a mechanism that is happening whether we like it or not, and we can either tap into that information to make a more informed decision or not. To tell you that you will make a better decision with this information, probably yes. Are you going to make the right decision? No guarantee. So if you found value in this video and you liked it, hit that like button, show the algorithm some love. And if you're new to the channel, if you've never been here before and you want to watch more videos like this, don't forget to hit subscribe and the bell for notifications so you can get notified when a new video comes out. Thanks for watching. See you next time.